Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a great start to your weeks. Happy Monday, everybody. It is indeed a new week, and we shall be getting into, in this video, what this week may bring for the cryptocurrency market. We've got an awful lot to share with you, because I think this week we're going to see probably some serious moves within not just the cryptocurrency space, but markets across the board that closed on Friday. Very, very weak when you talk about your S&P and your NASDAQ and many of your other stocks. That may continue into this week. However, it's going to be very sensitive to what the Fed have lined up. You know, we're looking at a 50 basis point interest rate hike this week. And then they're also going to set the tone moving forwards. And I think this is going to be a major market moving event. And we're going to get into it all. We are going to be looking at the Bitcoin chart, really refreshing our stance on it because it's important. Where we currently are, guys, is a very, very tender spot that could see my overall bias, and we've made we've not tried to hide it at the moment, is that this market actually sees more downside continuation. It will recover eventually, guys, but I think right now we're just very much swept up with the macro tide of things. And actually in this video, I want to talk to you guys about the economy and how it's looking. Because if we have a constricting economy, and I'm going to show you a number of tweets here that suggest that that is a fact, that is the fact here, talking about, you know, mortgage applications, talking about purchasing power for households after tax and how that's down 10%, talking about a number of things that we're seeing in the bond market and a number of other things. If we see a constricting economy, how does that affect the crypto space? And you've got to remember, March 2020 saw everybody become actually quite flush with cash, given the fact that the government was essentially subsidizing everybody and saying that they, you know, didn't have to go to work due to the conditions that they were fighting, and saw a huge inflow of money that, of course, found its way to markets. We're at the other end of that now, guys, and it's important that people understand that and understand what that may mean, not just for the crypto space, but markets across the board. You know, we had the futures opening yesterday. Futures saw an uptick. I think that it's not out of the realms of possibility to suggest that this move on the futures, and we'll see how your stock market opens, is very much due to just how down we closed on Friday. And it's not out of the realms of possibility that this is just some sort of a relief and people going, okay, well, we're down this much, let's step in at these prices in case you know, we do get some kind of bounce to the upside after seeing so much downside continuation. But, you know, overall, the picture that I have, certainly given where Bitcoin currently is that we do see further downside. I could be totally wrong. In actual fact, I'm short-term trading this market. I'm trying to swing trade this market at the moment. I don't trust the crypto space not to pump. Even though I think over time, so over the coming weeks, over the coming months, there's a lot of potential for further downside as people continue to take risk off the table as the situation unfolds and reveals itself. But short term, and we'll dive into the short term because we are in a falling wedge at the moment. We have touched to the descending resistance side of it. However, it's a weak touch, could be some sort of deviation that brings us more downside continuation. And that would kind of tie up with where we are in the logarithmic, the Bitcoin long-term regression band, sorry. And also we'll dive into the 3-day because we were showing you the EMAs that could signal more downside coupled in with everything. And of course, a weakening economy with inflation's going up. With inflation going up, you know, it's not a very pretty picture in my opinion, moving forward. You know, I think consumers are really going to get squeezed here, and I think ultimately that's going to, you know, put pressure on all markets and take more heat and more wind out of the sails of markets, which is essentially what the Fed are trying to do with these interest rate hikes. You know, they're trying to sort of dampen things, if you will. I mean, Jerome, they've made no beef. They've not minced their words in saying that. They kind of have a license to break at the moment moving forwards. And also we'll talk about the fact that the US dollar net long bets rise. Bitcoin posts largest net long since CME launch, CFTC. And this is from Reuters. So let's get into it all, guys. Market is slightly up today. I think this is somewhat following the futures market for equities. This is where we're at with Bitcoin. You know, we're looking at this long-term regression bands for Bitcoin, and we're at this very tender spot right now that I'm sure you guys can all see and appreciate. And in a downtrend, which we are in, you know, when you get to this level, you kind of use it, you test off it, before eventually breaking it. And I think the macro backdrop is actually somewhat supportive of this. We'll switch to the 3-day because we were looking at the 3-day 50 and 20 EMA, or 200 EMA, sorry. And we were saying, look, you're potentially heading for a death cross, which very coincidentally coincided right around where we currently are on these logarithmic bands, or long-term regression bands. And that could be the precursor for more downside. But that doesn't mean that the crypto market doesn't rally into that. And what I mean by that is, and we'll drop down the time frames. What I will do as well, guys, because I am currently short altcoins at the moment, I'll show you once we've got this video, the bulk of it out the way of, what I'm looking at for altcoins. I'm short Rune, I'm short Luna, and a number of other altcoins out there. That doesn't mean that I don't like the projects. I think the projects over the long term are going to do extremely well, and they have a lot going for them. But I think short term, they're going to get swept in and rolled up in the carpet with these markets moving forwards. And I think the Fed are speaking and actually setting the interest rate this week, or the interest rate hike this week. We're looking like we're going to get 50. If we got a 25 basis point rise, you'd see markets fly. But the thing is, the Fed are only going to be able to talk tough for so long, given what's happening with the economy currently. It's not a pretty picture at all, ladies and gentlemen. I mean, it's really not, to be honest, on the short term. But that doesn't mean, and the thing is now, everybody's looking at this. Everyone's going, okay, we're looking at a capitulation event. We've been saying this for a while now. The contrarian in me kind of goes, well, maybe that doesn't happen. Typically not everybody's right, but there are occasions where most people are. And it's kind of, it reflects consumer sentiment and everything like that. And that's potentially what I think is setting up right now. So very, very cautious at the moment, but that doesn't mean I don't trust Bitcoin not to pump. We'll drop down the time frames. We'll take the logarithmic bands off. You are in some sort of a falling wedge right now. This is something I've been watching because I've been short-term trading. My short-term trades always start with Bitcoin, even if I'm trading altcoins, because Bitcoin is the mover of markets. Of course, I'll look to macro markets first and kind of come up with an overall bias on the consensus of where things are going. However, you can see this is somewhat, you have bumped into sell pressure here like you have done previously. But do you now hold this and get that continuation, or is this a hard rejection that potentially brings you down and then crosses you over into some of those logarithmic bands? That's what I'm looking at. And this potentially, like I say, it's a treacherous market to be trading. Certainly with leverage, guys, I don't recommend anybody uses leverage full stop. But if you're going to use it, use a very small amount. I mean, it's rare that I'll go over 4x leverage. I think 10x leverage or even 5x leverage and above in the cryptocurrency market is really gambling. Because you're just kind of hoping that, the cryptocurrency market doesn't pump and see a 20% or 25% or 20% in 5x leverage on altcoins, and that would liquidate you. So I'm kind of curious with what's going on here. There's a lot of fear, and there's always kind of a relief of fear, I find, moving forwards in markets, is when everybody's fearful and scared, it can often, and the shorts start to rack up, it can often present quite a short squeeze where we get a move to the upside and your shorts get liquidated, they become forced longs, and the price moves accordingly. So I wouldn't trust Bitcoin not to pump here. But I ultimately still think, my overarching view is that this market goes lower. I'm not going to beat around the bush with that. We have all these amazing things taking place for crypto, and it's not even moving the market. We get amazing news daily now, guys, and the market just simply doesn't react to it. Let's move on to the dollar. The dollar is actually still holding up quite well. Yes, we saw a pullback, which after a run like this is quite natural. But you guys know my overall thesis on the dollar is that it's actually moving up higher to this sort of range over here. We have taken out or certainly touched below, and we need to kind of close above now these previous highs, use them as support, and get that continuation up to your sort of 108 to 110 range. I can see that given what's happening in the Eurozone. Now, that typically wouldn't be good for crypto and your risk on assets. But we will see how this all transpires. And this is hopefully this channel for you guys is being separated from the rest of your crypto YouTube channels, because we are critically thinking about this market from all angles. We're not just pointing out triangles in a chart or showing fractals from the 1900s or 2017 and hoping that they play out in a similar manner. I think it's very foolish to do that, because what you're doing is you're totally disregarding any of the narrative surrounding things. Now, narratives are often manipulated, but what I mean by a narrative is we're putting all the pieces of this puzzle together, and we're saying, look, the probability right now, in my opinion, is that we see more downside continuation. Doesn't have to happen, But I think it's more likely, it's a probability-based game. I think the probabilities are stacked against crypto right now in the short term. And I think it's for a number of the reasons, and there's reasons that we miss out, by the way, guys, that we're talking about in this video. Let's move on to the general economy. We'll talk about the Reuters letter in just a second. Le wealth destruction. Over the past 4 months, a stock/bond book went down 16.2%. Last time you had this much pain over a 4-month period was October 2008, which is certainly interesting. The bond market's getting smashed, and in actual fact, I'm short debt on IG. The purchasing power of after-tax household income has plunged 10.9% in the past year. So this is interesting because what you've got to factor, who moves markets? Retail's very involved in the cryptocurrency markets and markets across the board. Yes, we've seen people take risk off the table to date, but my concern is what happens when people aren't just taking risk off the table and in actual fact they're like, trying to get out at whatever means. They can't stand the pain anymore. And I think markets are quite prone to moving towards pain points. And that's why, I want to keep everybody conservative. Long term, nobody's more bullish on the crypto space than myself. Short term, I think we're in for a bumpy ride, guys. And it's because of the reasons that we're talking about. And I'm watching this market like a hawk. I'm actively trading it with some serious size, with a little bit of light leverage, which is super risky and dangerous in the crypto space because the consensus I get with a lot of traders right now, certainly your range traders, is they're not actually touching it right now. They're looking for more confirmation that's going to give them some more confidence to move into some sort of a leverage long or short. But when we start to see consumers get squeezed, and this next one's extremely interesting, the Fed can kiss the US household market goodbye. Weekly mortgage applications fell by minus 65%. Market's still hot now, but just a matter of time before it cools off. Leading data always ahead of Fed. Liquidity contracts could become severe if they persist. So what he's highlighting here is the fact that people know the amount of people applying for mortgages actually fell by 65%. Yeah. And you can see the spike that we had, and now we're at the back end of that. So the housing market is cooling off. People often judge their wealth by the house that they have. People often have that kind of security net that is their house. But what happens when those prices start to slip along with everything else? People are going to be looking for liquidity, and I think that people aren't going to hesitate. Put it this way, if you had to choose between selling your house or your crypto or some stocks that you've held for years or your crypto, I think people are going to choose crypto. And I think we're painting the picture here that is potentially spelling for people maybe exiting the market to more of a degree than they already have. Largely, I actually do believe, and we'll pull up Bitcoin again. I love looking at charts because when you first start looking at them, you don't quite understand them. It doesn't really make sense. But when it's like painting a picture when you're looking at these. This I don't think was institutional exiting. This in its laddered approach. Can you see how this is capitulation? This is people exiting. I think we maybe move into that capitulation given where we are, and then we start to rally up. And I'd actually quite like that. My net position is long crypto. My spot position, I hedge that with shorts across the board to really kind of, I'm covered at all. If the price goes down, I make money. If the price goes up, I make money. So ultimately, I'd love it for this market to just rally. I'd make more money in that kind of a sense. But if I'm prepared for both scenarios, and I think that both scenarios actually could play out here, I wouldn't be surprised if Bitcoin does pump out of this. But I think it'll be short-lived. I think it will just be a sort of lower high, potentially falling into a lower low from this kind of a trend over here, and then we'll see how things transpire. This is another one from Charlie. You guys can read that. I'm not going to try and say the second name. It's early in the morning here. This video will be coming out a little bit later, so we'll see how markets have transpired or moved on from this morning when you guys are watching this. This is the longest US bond market down draw in history, 21 months and counting, and the largest minus 11.1% since 1980. Note using monthly total returns. And this is what I mean. People are looking at this economy. People are looking to bid the bond market up and bid the stock market up based on how far it's already fallen, forgetting that, the Fed doesn't really have your back now. The Fed's previously had you back. And with the bond market, it's an interesting one because the Fed have essentially, and it's what's led to the ultimate demise of it and going to lead to the ultimate demise of the bond market, in my opinion. And it's Francis Hunt that showed us that, by the way, guys, the market sniper. Make sure you go and give him a follow. He also goes by the crypto sniper and the reset sniper. Tell him ALLIN sent you. You know, the reason that that's going to come to a demise is because of the Fed tinkering. They're actually legally not allowed to jump in and save the bond market like they previously have been in the yield and sort of play around with the yields. So it's going to be very, very interesting. I still think there's a lot of people out there that still are somewhat in denial that this market can go lower. You know, when we're looking at altcoins, and we'll jump into a few of my favorites at the moment. You know, Rune, for example, I fancy as a short. Reason being is, where does the strength come in here? You know, and in actual fact, I'm looking for it to come back down and test these levels here, which I think would be real strong support, which could be still a 57% move. When you look at the likes of Phantom, which I'm not short, by the way, because I like altcoins that, you know, from their all-time highs are less down than the likes of Phantom. I mean, Phantom is currently nearly 80% down. I see people on Twitter going, well, it's 80% down. How much lower can it actually go? Just basing the fact that it's not going to go any lower on the fact that it's already 80% down. Well, what happens if Bitcoin sells off? What, you think Phantom just is a pariah, or you think these other altcoins are just complete pariahs? I don't think so, guys. I think it goes with the rest of the market. And that's what I am sort of looking at the moment. And if I see that Bitcoin weakness, which I'm envisioning that we are going to see, your altcoins are going with it. And that's why I'm short quite a few altcoins right now. And I actually hold many of these altcoins, including Luna. I actually like the look of Luna. I mean, Luna's done quite well. We've seen some sort of a bounce. Could be somewhat short-lived. You know, I wouldn't be surprised. And this is what I mean with trading the cryptocurrency market. It wouldn't surprise me at all if Luna comes up and tests these levels again and then goes down. And this is what I'm saying. Don't use leverage trading these markets, guys. I'm in shorts right now. Very, very low leverage. The reason being is because if I was 5-6x leverage and it does that kind of move, you're in a world of pain and you've lost a lot of your P&L already. But the likes of Luna, you've also got Head and Shoulders for Luna, in my opinion, of some sorts. You've also got it for Rune. And I'll actually show you that. I mean, this is going to be a bit of a longer one just because we've got so much to talk about, but I hope you guys appreciate this content. We're giving you what other people on the crypto space just don't give you. We're evolving as a channel to become a lot more than... you know, just looking at the cryptocurrency market and saying, you know, I could definitely envision some sort of Head and Shoulders here for Luna. Rune. Something like this potentially playing out, and we're already set for that downside continuation, which would take you below actually this level of support, which lots of altcoins kind of meet these kind of critical levels and then drizzle below them. And that could be a potential play. But it's one that I'm not necessarily hoping for, even though I'm sure. I still am long Luna. I'm still long, you know, all these altcoins that I mentioned in terms of I hold them. But I am shorting them due to sort of trying to mitigate the damage that I think could come for the cryptocurrency space. Fed will determine the fate of markets. And this, even though it's from Cointelegraph, which typically these articles are wrote by people who I wouldn't trust with my money. You know, they're right here. The US central bank will make what is becoming a monthly dictation of what markets do this week due to new rate hikes. Yeah, and that seems to be likely. And do we maybe see a rally into that and then a crash on it? Potentially, but I'm also very cautious that I think these markets are quite trader driven at the moment. And then you will have spells where people panic out of them. But people will be looking to maximize profits on both the down and the upside, and they'll be looking to counter trend and trade. And that's why my leverage is extremely light moving forwards. We did see the stock. So the S&P and all your US stocks haven't actually opened yet, but the futures market opened last night. We saw an uptick. We're now getting that eaten away. So this day is going to be quite telling and really setting the pace, I think. Monday's going to set the pace. We didn't see a spiller or a slam all the way from Alabama like we saw last Monday. But I think things are going to, the pace is somewhat going to be set from today onwards. And I think if we start to see your markets really sort of slam back down, that's going to really not be a good precursor into the Fed moving forwards. And I think the Fed are also talking about actually upping interest rates by 75%. If they come out and say that, 75 bips, what do you think happens to the cryptocurrency market? They're doing 50 now. They might do 75 next time. And they need to get at least off the zero mark, which they're barely off at the moment, guys. They need to do that fast in order to come back down the other end. And that's when I think markets sort of fly and come back to life. This has been a very long one, guys. I have so much to talk about. What I want to do is start doing live chats with you guys so that we can get questions answered and asked and answered live, so that I can answer them. It's very hard for me to get around and answer all the comments. And just please be wary, because there are scammers in the comment section pretending to be me. I will never DM you. I don't ask you guys for anything. If you go and check my bio or the description of this video, there's not even a link in there with a referral on it, guys. You know, I want you guys to succeed, and the way that I think that that's best is by me not extracting money from you and giving you my honest and up-to-date opinion. So that's really all I have for you in this video, guys. If you have enjoyed this content, a like is always appreciated. Very quickly, we have the largest Bitcoin post, largest position net long since CMEs started. So people are speculating that actually, you know what, they're going against the trend here. They get the counter trending things, which I found very interesting. Anyway, wrap this video up, guys. If you enjoyed the content, like is always appreciated. So is a comment, and I look forward to seeing you all in the next YouTube video. Thanks a lot for watching, ladies and gents.